Hey, good morning everyone. This is Chart Sniper again with another weekend review of markets and indices, and this is for the upcoming week of March second week from 7th to 11th. So last week has been a consolidatory week as discussed in the last weekend. So it probably ended up exactly where it was when the week opened, right? So just let's try to take a deep dive into what could be in the pipeline for the next week. So let's get started with the SPY. Okay, the SPY index as such. I'm trying to zoom to a longer term pictures because we recently are below certain major consolidation here below 435. Okay, so until unless we go above that, there is so much weight above this price level that we might be exploring newer lows here. Okay, so with that being said, let's take a step back and look at a longer term picture. So this is a 3 year chart for SPY, and what we are looking at here is that SPY is below that heavy volume node, and we are looking at below 5 EMA, 8 EMA, and 50-week EMA. Okay, so with that in mind, as you could see, there is a lot of vacuum here, and if it kind of leaves this node, I think the next node is around 417, and if that fails, we are talking about 385, and 385 aligns with 100 weeks average. Okay, so I want to focus less on SPY, but instead try to focus on QQQ because SPY is made up of a lot of sectors, and some sectors are outperforming in this kind of war scenarios. So if we get a look at what are the different sectors in SPY and try to kind of get an idea on how they have been performing in the last week. So let me get that here. So let's see, view full tracker. See, energy has been performing quite well. Even in the last 5 days, it is up 9%, where the market has been significantly down, correct? And then when we go to last 1 month, some of the strength in energy is neutralizing some of the weakness that we have in other sectors, right? So SPY overall might not give us a good picture, right? Whereas, especially if you are heavily invested in tech stocks, QQQ is probably a better indication on where exactly um, the market might be going. But overall, this level of 445 on weekly, correct? And then 435 on daily in SPY are important, 435 to 445. So 445 aligns with 200 days average. Okay, so that's what we are looking at as a resistance. Okay, and last 2 weeks have been decent. Sorry, 2 days have been decent sell. And let's look at weekly level. The sell volume is yeah, whatever bullishness that we had the week before on bottom buying, that is all neutralized by this week. Okay, so let's see how it goes. But the overall direction from weekly perspective is downward below 5 EMA, and it is going downward. So let's take a look at monthly. So on monthly, we have that room that 5 and 8 are doing a dead cross there. Potentially next this month, I think probably it might not happen, but next month it could. And we are looking at a support of 400-ish. Okay. So 385 is a major support right here, and we are looking at 435 and 450, 440, 440 as resistances. Okay, 445. So there is a lot of gap for it. It could fill on monthly to reach the 20 average of monthly. Okay, as long as it is about 20 average monthly, keeping it simple, it's in bullish trend. So it can move still 409 to 409, another 20 points down and still be bullish. Okay, so we have around 410-ish as a support, but you see there is not much volume there, so probably it might, if it comes to that level, it might go down to the 380 levels and stuff. Okay, so we don't need to be heroes, and we should not be bottom fishing right away, because it's not, there is no healthy, there is no strength as such anywhere technically, and every time it's making a lower low and a lower high, and until that pattern breaks, we should continue to be looking at any bounce that happen as sell opportunities, sell the market, or if you are already in some stock that are in deep red, at least try to book loss here once it bounces there. Okay, so looking at any bounce, I don't know how futures will open. We did not hear any positive news as such from the war, correct? And with that being said, futures might open neutral. We did not even hear any negative news also, like a big negative news as such. So futures might open within few percentages around where it closed on Friday, and probably it might do that quick bounce up a little bit to test these levels and then slowly fade away into the next week. So that's the idea of how it might be looking for next week. So I mentioned, let's move to QQQ as I would like to spend more time there. So what is happening here in QQQ? So as of now, we are again at below the 340 level, which is a major node, and the next level that I'm looking at is around 315. So which is shy of this level and a little bit lower than that. Okay. So with that being said, on daily it looks very weak, and the Bollinger Band is also kind of pointing downward, which means it has more room for it to go lower. Okay. This gives you a sneak peek of what probably might be happening to the overall market. I know energy is outperforming, but it can't keep on outperforming forever. Whenever it kind of gets hits that resistance level, those sectors also might be trying to align themselves with the overall market. Okay, and when those things that are outperforming and holding in SPY um, kind of starts giving away for the overall weight of the market direction, then we will see that SPY might follow typical pattern which QQQ is already following. So what is the first thing that we would like to notice? That is the dead cross here. Okay, the 50 weeks average, so 50 days average and 200 days average had a dead cross here. So that means the we officially entered into a uh, bearish market or a correction market. Okay, and last time when we go and look at it, it could have been a very, very long time when the dead crash happened, and let's explore how that behaved when the dead cross happened. So we are looking at a dead cross that happened here in March, correct? After after that March 2020 time frame, and this is where the dead cross happened. It did not go much low, but it was on April 30th, and we kind of crossed back above it on May 21st. Okay, so within a matter of around 1 month time frame or 20 days time frame, we gained back above that one. Okay, so this is the zone that I'm talking about here, losing off it 430 and gaining back above it at 520. Okay, so 20 days. Let's go and look at what any other time when it happened. So this was in 2018, and I know I have mentioned this one before also, that this it probably looks more of a setup. Okay, so we try to kind of go above it, and slowly the dead cross happened, and you see there was this low. And actually what I can do is I can detach this guy. Let me remove the volume profile because I have more and more gut feeling that it might be very similar to what happened in 2018. So I have this, and let's align whatever we have here happening, correct, with sorry about that restructuring, right? That's and let's align what is happening here in 2019. Okay, so with these two available on side by side, we can probably look at what could be the potential future move. Okay, so we are looking at a 3 months time frame window here. In 2018, the down move started in October, and the bottom was put in December. Okay, and now the down move started in January. Okay, October, beginning of October to end of December, which is around 3 months of time frame, right? So we have beginning of January, probably March end or something like that. Okay, so we have this down move, right? Down move, a bounce to 100 weeks, bounce here, and then further down move here, bounce, okay, bounce, further down move here, right? Further down move, and there comes the dead cross, okay? And the dead cross, which came on December 4th, happened to be there for a long time, okay? So until April 2020. Okay, this is the where the dead cross happened, and this is where the golden cross happened again. Okay, so we have to wait and see how it looks like, how much time it will take. But there is no guarantee that this kind of gets narrowed down immediately and start bouncing back above like that. Okay, we can steepen further. Okay, so this is a consolidation that we have been seeing, and if you align that with this guy, so there might be a deeper, big pullback that flushes everyone. And probably this happened, like for example, after the dead cross, right? The market tried to kind of float around for another week or so, and then after that week consolidation, it started giving up. It's very steep, and this is from December 12th all the way to December 26th, which is around 14 days, 15 days of deep pain, correct? So that kind of flush, if it happens, are you ready for that? Are you preparing yourself for that or not? It may or might not happen, but what if the Russian war intensifies, and the countries, world countries, try to involve more a little bit? And I think I read the news that even putting sanctions, Putin is considering as being part of the war, right? So we never know what happens. One wrong mistake could trigger it further down. Okay. So, with that all being said, I be prepared for this kind of flush. Okay, and this dead cross happened, and until unless this kind of do say golden cross again, you don't need to be bullish. You don't. I don't want you to be bottom fishers. I don't want you to be heroes who uplift the market higher, right? So use I mean, at least as long as it is below 5 days average, is a no-no for any long side entry. Okay, and if you are a swing trader, then probably you can use the 5 weeks average as a very decent signal. For example, here, um, this is the where it lost 5 weeks average, and from then on Jan 3rd, it never closed below that, above that gray line, right? It tried to move above it, but never closed it. So that would be a sign for you, as if you see a week where it closed above that 5 weeks average, then you can position yourself for some bounce. But as of now, it doesn't look like that. You don't need to be getting into any long positions as long as the price is continually closing below that 5 weeks EMA. Okay, with that being said, let's look at some levels, and we are looking at 320-ish. Okay, what if the 320 doesn't hold, correct? So that's where probably we'll be seeing this kind of flash. And let's go and look at monthly. So monthly in QQQ is delicately supported by the 20-month average. Okay, but looks like we may get supported or we might give back, right? So when it kind of comes back down below that level, you see there is nothing here supporting it, and that's what causes the flush to happen. Okay, so we are talking about 50 months average. There is some consolidation here from October of 2020. Okay, this consolidation for 4 months might form a support, but as of now, that level is around 300 to 270. Okay, that level. Okay, so that's what we will be looking at, and when we lay over some support there at 320-ish. If it's lost, the next support, major support is 280. Okay, almost you can say a middle of this 100 and 200 weeks average, which will be 150 weeks average. So that probably is going to be some support looking at 282. So if it comes to that level as part of your flush, that would be the point where you deploy all your sideline money. And let's actually retrace a similar kind of move that happened here. So if you're expecting those kind of similar kind of move that happened in March ish, we already retraced that much percentage wise. So whatever the March down move that happened, we already kind of reached 100% of that, and now we might be exploring to move further down. So percentage wise, I think we are already, whatever happened in March, we are already um, at that level. Okay, and that probably is why this level is being held as support, because that was a recent big move, and we already retraced that much from the highs mentioned here. Okay, but overall, have some money on the sidelines so that you could deploy it whenever you feel that you hit these levels of 315, and from a long-term perspective a level of 280-ish. Okay, so 280 290-ish, that's where you'll be looking at some kind of major support. And if you buy there, and probably after the war and a bounce up, what you'll be looking at to all-time highs is around 30% or 40% profit. Okay, so from that level, around 290 levels and stuff, you'll be looking at 40% profit. Okay, so be cautious, play a waiting game, and be patient, because these will be very quick down moves. And be patient until market shows a direction strength, right? Strength in the direction to the upside, where it's closing above 5 weeks average, and then slowly staying there for some more time and start going higher. Maybe it will bounce all the way here and then further pull back there. So all those things you can play from one level to other level, but so far it is inclined to move down and explore more lower levels. Okay, so with that being said, with QQQ, let's go and try to see what exactly is happening in Dow Jones. So a big upswing move and a kind of a dozy for the last week, and we still have this much area to be explored. So we might be looking back, um, exploration of this area too. At the overall market direction is still pointing downwards, and we tested that 5 weeks average, and any bounce to that 5 weeks average again next week, you can probably use it as a sell the rip opportunities. Okay, so yeah, align yourself with this one and try to ride the market um, sensitively from those levels. Okay, And on a daily level, we are looking at, below heavy. There is no support here at all. So we may have to go back to weekly, and there is not much support here until that 314 level, which aligns with 100 weeks average. Okay, so 100 weeks average 314, probably we have some support there. Okay, um, IWM. So IWM already touched 100 weeks average. It retested that, and it might be retesting it again for sure. And yeah, those levels are around 187, 187. Probably it might go and test there one more time, forming a triple bottom. Um, Already it's kind of pulled back a little bit. I don't know how much further down it could go. But on from a weekly perspective, once it gets into that below that level, like those sorry, these two levels, once it sees, the next thing that we are looking at is around 175-ish. Okay, from very long-term perspective, that has a very long-term support. So if in case it comes to those levels of 170-ish, right, or the 200 weeks average, that probably is something where you can buy it for a very decent profit to the upside once the market starts bouncing back. Okay. Yeah, again, as you can see, from the time it lost here, except here one time, two times, it never closed above 5 weeks average. Okay, except here. Okay, so that's what, use it as a guideline and try to navigate it. If this level breaks, it can flush down that, and that's what I'm afraid of. It's been almost like close to, we're in third month of this negativity, so we have to be careful towards the end of that. Let's look at actually TLT. TLT, we have a decent up week there below the 200 weeks average, but above that 8 and stuff. As you know, as I mentioned before, you can look at TLT to give you some clues on the direction of the overall tech sector, because as it bounces higher, the yeah, but I think this is probably a sell the rip opportunity. A bounce to that level will be sold again. And if you show this looks like a big bear flag right here, as you could see. If it resolves lower here, that's what probably we'll see that flush, right? We'll see that big flush coming out of this one, okay? But this similarly is you can compare it with QQQ, and yeah, when the Fed makes a decision to rise interest rates more aggressively more or pessimistically, right? Not that aggressively, because overall war and the situation. If they say that they will try to look at data more carefully and make a decision, uh, and we end up being not having those many interest rate hikes as we initially thought before the war, then that probably might keep it afloat, and overall the market also, it might keep it afloat for a few more days. And if war kind of stops here, or slowly doesn't intensify, then we might be looking at these levels as a bounce opportunities, or forming a base opportunities, where we can see that it uses this as support, probably it retests this, and it forms a base here and starts bouncing back here without any flush happening. So too many variables now. Intensifying war, we never know how it turns out to be, but intensifying war and Fed being more hawkish, like more interest rate hikes, despite this war situation. Those are two negative news. But if Fed says they'll be more looking at data and then make a decision, less number of hikes than it initially mentioned or market anticipated, then it might stay afloat here and then start bouncing back probably to that 50 weeks average, and then probably give back. Okay, or any positive news from war perspective also might make the market to hold these levels and kind of go back to those 50 weeks average 360 levels. Okay, so with that being said, let's look at q sorry, weeks. We have been staying above 30 levels. That is not at all good, right? It's above 30 is kind of, market is probably in a big correction, big fear as we were drawing this uptrend line here. Why is that not? Okay, so let me align that a little bit here. The top. Okay. So what we'll be looking at is whatever flush that's about to come will hit that spike around 42-ish, and that would be probably where the market finds its bottom. So far, above 30, very, very risky for any upside moves, correct? And very, very high premiums are there. Let's look at put call ratio. We see that peak, right? And actually, what might help here is the purple. So the purple line that you're looking at whenever it hits that high, right? Like, very peak put buying. So the market kind of bottoms and starts bouncing back. And there was this peak put buying, not above one, but, probably market might see a little quick bounce there. But, uh, we'll be looking at this kind of indicator around 1.5 or something like that. This is what happened in November, and let's go and see the March 2020 levels, right? This is August. So March 2020 levels, it hit that 1.72 mark there. Okay, so if you can compare this guy here. Sorry, if you can compare these elevated prices here, right, around 1.4 or something like that, that was not the bottom of the market, right? So when it hits that high 1.72 level, that's where form the bottom. So we'll be looking at that kind of a pie where a high where everybody panically buys, that goes and puts that buy a lot of puts, and that put call indicator hits that level, that probably forms a bottom for the market, and look for that. We'll be looking at that kind of above 1.5 hit mark, and by that time, if the flush already happened, then that could be a solid bottom there. So that's how put call ratio can guide us to predict. But as of now, it doesn't look anywhere like the market has bottom yet. Okay, so we might see that high indicator on one fine week where it flushes even more. Okay, so with that being said, yeah, that's pretty much how overall the markets are doing, with a lot of two different headwinds that will be coming: Fed interest rate decisions and war intensification. And the best case scenario would be war still kind of intensifies and Fed kind of become dovish. Then that will be neutral scenario. And best case scenario would be war kind of recedes and Fed still does not rise. Does not have those many interest rate hikes this year. That is the best case scenario. So with that in mind, I would like to conclude this weekend indices reviews, saying that be cautious and try to kind of show some patience before you go and buy aggressively towards the long side. It doesn't matter if you have a lot of capital sitting aside, you have to patiently wait until it hits that a major support levels before you kind of make that big long-term investments into this market. Okay. Yeah, thank you very much for tuning in. See you next week.